Good afternoon, good afternoon, good afternoon, good afternoon. Well, it's still morning time, I guess, 11:59 Central Standard Time. Well, welcome to Workshop Wednesdays. We're back with the Master Closer. I'm here. It's part of my college. It's a little crazy right now, but we're here. Here to help. Let me take off my hat so you guys can see me better. So, I hope everybody had a good week so far. The reason why I do this on Wednesdays because it's the middle of the week. Everybody's groggy. Everybody's like, let me finish out the week. But I figure with my enthusiasm and my energetic voice, I'll be able to hype you guys up and get you through the week with some knowledge in the brain. Last week we talked about a few things. We talked about getting off the fence, getting off the fence. It was a big deal when everybody was on the fence. It's like it's a constant stagnation point that everybody sits on the fence when they're scared to take the leap of faith, so to speak. The put their toes in the water. People are scared of it. It's a big deal. But hey, this is what I'm here for. I'm here for the questions. I'm here for the talk. I'm here to make sure that everybody can talk to me and ask questions when they need to be, when need to. And also, they can leave this whole thing with a good idea of what to do going forward, whether it's buying a property that your second home or whether it's, your first home or whether it's your 50th home. Who knows? Who knows? But the goal is to get you guys out there and to have you guys with the right frame of mind on what to do next. That is the goal. So we got to make sure we get off the fence, people. Ladies and gentlemen, we got to get off the fence. We just got to do it. Young people, you guys are go-getters. I know you guys would get off the fence. I know you would. And I know you guys will get out there and put your best foot forward. I'm talking about the people that, you know, talk themselves out of doing the right thing because they're scared. I can't tell you how many people talk themselves out of it. They question this, they question that. They go on Google, they try to figure things out on their own. Let me tell you something. You're not a professional. It's just the facts. You guys are not a professional. So, with that being said, it's not to be nothing to be ashamed of. It's not to be. I'm not trying to talk down on you. I'm just trying to give you the enlightened thought that you're not a professional. So why wouldn't you go to a professional? You see this phone? This phone is our best friend, but a lot of times our worst enemy. Because we go on the phone for everything nowadays. That's why I'm here on Facebook Live. I'm hoping I catch you guys, on your phone, Facebooking, and you guys are listening and stuff like that. I'm trying to make sure that you guys fully understand what I'm telling you. We want to make sure that you don't go to the wrong people or the wrong websites or the wrong places to get the knowledge that you need. It's imperative. It's imperative. It's a big deal. You go out there, you ask, Aunt Mary, Uncle Joe, cousin Rupert. I don't know where I came from Rupert. I had a good friend named Rupert. Rest in peace. But you can't go ask all these people. You know why? Every situation is different. Everyone. Every situation is different. The next door neighbor won't have the same mortgage as you. The person across the street won't have the same mortgage as you. Circumstances sometimes they are similar. I'm not going to lie to you on that. But they're not the same. That person may have more money than you. That person may have less money than you. That person might get this, like down payment assistance. This person might get seller's contribution. This person might get a grant. Who knows? Their job might be moving them. You never know. Never truly know. And it's I can't stress enough how important it is to talk to a realtor and talk to a loan officer. Those two people are the most important things when buying a house. A realtor could tell you top to bottom, a good realtor that is, good realtor. And ask me about it because I've got a bunch of my Rolodex. You've seen me, flicking pictures with them. I got a bunch of my Rolodex. Trust me. I know a good realtor when I see one. I'm not going to hook you up with anybody that's bad. But a realtor would tell you everything about the house. They know the things that you're not looking for. They know. It's a fact. You know why? They went to school for it. They went to school for it. Not only that, these realtors that I have in my Rolodex, or who carries a Rolodex? In my phone, and the scary thing. Remember the scary thing. The people who I have in there, they've been mentored by great people. They've got experience in the business, and they've seen a lot of crap. Not in a bad way. When I mean a lot of crap, they got the bumps and bruises in the game. They've seen people just come from nothing and make themselves into something. They've seen houses, you know, get built from bottom to the top. They've seen, hard deals to put together. They've seen everything when the seller doesn't want to pay for, cosmetics, and they're able to negotiate that. They've been through the mud. They've been through it. So it's imperative to talk to that realtor and, ask them questions, and keep in mind, since you guys don't know the business, no question is a stupid question. That's a fact. No question is a stupid question. Every question is a smart one because you guys just don't know. If you don't know, you don't know. So with that being said, we want to talk to a realtor about a lot of things, inspections, um, if you don't like something on the house and it needs to be fixed, like, sometimes it could be simple. Hey, the tiles look like they're coming up a little bit. Can those be fixed? Or, you know, uh, the side of the house looks like it's got a little crack, or the wood is rotting on the fence, stuff like that. Easy fixes, Well, the crack on the side of on the house that's a big deal. Just FYI. But stuff like on the fence, can it be fixed? Rotted wood. Always ask about stuff like that. Plus, a realtor is going to tell you about an inspection report and all that stuff. That's neither here nor there. Then the loan officer's job. The loan officer's job is to make sure that your pre-approval is solid. They've seen your documents. They ask you for extra stuff, even though they might not even need it. But they ask you for extra things. They want to make sure your file is airtight. Because when you get in the contract, when it's time to get on the horse. You get on that stallion and you ride the horse all the way to the end of the race. And I hate to say it, you got to slap the horse's butt so it can run faster. And the only way you can do that is by getting your documents up front to the loan officer. Now, it's up to the loan officer to determine what your DTI and all that stuff, or how much you need to put down, yada, yada, yada. Do you qualify for down payment assistance? Do you not? And we're going to get into a lot of that stuff today, ladies and gentlemen. We're going to get into down payment assistance. We're going to get into seller's contribution, all that stuff. Because I've always get the question of, hey, Maurice, how much do I need to buy a house? How much do I need? I don't know. I don't know. You know why I don't know? It's because you haven't chosen a house. Or we haven't even discussed the price range. We haven't even discussed anything. I haven't seen any documents from you, so how am I going to know? You're like telling me to throw a dart at a dartboard like this. And I could tell you right now, with glasses, binoculars, I still can't throw a dartboard. I still can't throw a dart to the dartboard. I can't do it. I'm just never good at it, so I know what I'm good at. I'm not going to do it. But we want to make sure that we are here to understand and talk about the right things here. We want to make sure that we put you guys in a position of strength rather than a weakness. I always talk about that. Every time I talk to a client, I want to put you in a position of strength. Because if you don't know, ladies and gentlemen, you don't know. You don't know. So how can you expect to be able to talk to someone about something you have no clue about? Because you've never done it. Never done it. Now, even the people that has bought and sold homes time and time again, they don't know. Do not get fooled. They may know how the process works a little bit better. They don't know the ins and outs of it. Can't tell you how many times, had a person come up to me and say, hey, I want to buy this, investment property. All right. Got 20%? Oh, my goodness, 20%. Jesus. Maurice, you're crazy. I don't make the rules, pal. It's just what it is. But let's not talk about that yet. We'll get there, ladies and gentlemen. But one major thing that we want to make sure is that we have our finances in line to what we need to do. And again, that's what we're going to talk about today. We're going to talk about all the down payments that we need to. We're going to talk about them. And a lot of it always boils down to how much you can afford per month. A heart surgeon can probably afford a lot more than a barber. Unless you're cutting like Keyshawn Johnson. That's my favorite football player. Shout out to the New York Jets because he played for them. But unless you're cutting like Deion Sanders or, some exclusive guy, 9 times out of 10, the heart surgeon makes more than the barber. So, with that being said, the payments are going to be totally different. And the reason why I say that, because that's going to also determine how much you got to put down. Yes, it is, ladies and gentlemen. It's going to determine how much you put down. So you can't come to me and tell me, hey, my friend, she went and bought a house. It was beautiful. It's 5 bedrooms, 4 bathrooms. She's got a patio, a pool, yada, yada, yada. She's got all that stuff, the bells and the whistles. And guess what? You don't have her job. You're a hard-working registered nurse. And guess what? That person is an attorney. That person came up with their own money. You, on the other hand, you have to dip in your 401k. And I hate to say that, but those are the reality of the situations that happen. So, now, let's talk about how this market is turning. This market is definitely turning, ladies and gentlemen. I would say about 6 to 7 months ago, okay, it was a seller's market. You'll hear it from realtors all the time. It was a seller's market. I mean, houses were selling at an obscene amount. Obscene. Houses were selling 100, 200, $300,000 of what they were worth. Hand on the Bible, put me in court right now. Judge, this is what it was. It was. It was selling at an obscene amount. Now I bring this up is because I hear a lot, from first time home buyers especially. Yeah, my friend, they said the seller paid all their closing costs. Really? Okay. That's great for them. That's awesome. And I applaud stuff like that because hey, a good realtor is a good realtor. They can negotiate that stuff for you. That's their job to negotiate. Negotiate. So when we're doing this, we got to keep in mind that you aren't that person and their situation was different. All right? So let's talk about these sellers' contributions. The market has shifted now. It's now a buyer's market. Is everybody going to get sellers' contributions? No, it's just not the reality. But your realtor is going to fight and go to bat for you. Just seen the contract the other day with $10,000 in seller's contribution. Just seen it. Just seen it. It's insane. The reason why is because it's a buyer's market. So what's happening is now more inventory is coming on the market. There's more houses for sale because the interest rates have gone up. The interest rates have gone up. And at the end of the day, the interest rates have gone up. What's going to happen with sellers is that they're going to, I'm sorry, not sellers. What's going to happen is a lot of these aggressive investors that were coming up and buying a lot of inventory, just coming in with 100 grand more, 200 grand more, they pulled back. They said, wait a minute, these interest rates are way too high. I don't know if I can get rid of this product in time. I don't know if I can do it. So what happens now with these first time home buyers? See, these houses are coming back on the lot. These houses are coming back on the lot, and they're saying, "Hey, I don't know if I can come up with hypothetical number $20,000, and I don't know if I can come up with $20,000. Can I get some help?" So now the realtor on the flip side comes and says, "Hey, I need to negotiate. I'm going to try to negotiate about, let's say, $5,000. But you can come up with 15. You got it. But do you really want to spend the whole 15? That's all you got is 15 grand. Because the last thing I need you to do is go in the house and you can't even get the couch. It's the last thing I need from you. So we want to be able to negotiate. We want to be able to have the realtor negotiate everything that it can for you, everything that they can for you. So write this down, ladies and gentlemen, because this is key what I'm about to tell you. There are different type of loan programs for everybody. Different type. There's a conventional loan. There's an FHA loan. There is a VA loan. There's a USDA loan. Those are the four main loan programs for everybody. For everybody. Everybody falls in those brackets. Okay? Now, you guys have heard of Fannie Mae and Freddie Mac. They write the rules. They say, hey, here's the rules. You guys figure it out. Try to make them fit in this box. So now, write this down. FHA. They allow you up to 6% seller's contribution. That means if you are buying a house for $100,000, the seller can pay $6,000 worth of your closing costs. $6,000. It's a lot of money. It's a lot of money. Oh, I'm just not, pockets tight. Help me out. Now, for VA loans, and this is for my veterans out there. I love you guys. Thanks. Salute. Thanks for fighting for us. For you veterans out there, it's 4%. 4%. Okay? You can get up to 4% of seller's contributions. That means the house is selling for $100,000. You can get $4,000. The seller can pay $4,000. If you have a conventional loan, which is the cream of the crop, that's the cream of the crop, the seller could pay 3% of your closing costs. That means if you have a $100,000 loan, they can pay $3,000. Okay? USDA, 2%. They can pay 2%. That means if you have a $100,000 loan, they can pay $2,000. The seller is giving you money. Money. Now, here's where it gets tricky. Now, if I am selling a house and I give you money, it's going to take away from my bottom line. In other words, if I'm selling a house, we're just going to keep simple numbers here, at $100,000, and I'm going to make, let's say, $30,000, and I give you $5,000 to help close on a house that I'm selling. Now I'm only going to make $25,000. So that takes away from my bottom line. So you ask yourself, why would I do that? Why would a seller take away from his own pocket to do so? Now this is where you can't be cheap. And I understand, because I'm cheap. But I get it. I get the business. Can't be cheap with everything, especially where you rest your head. Now, this is when a realtor, a good realtor, not just anyone. So if you hear, hey, I just got my license. I'm not, congratulations, you just got your license. I'm all for it. Let's get it done. But you need to learn the business. You need to know how to negotiate. Unless you're a hustler, unless you can go hustle and, talk your way through it. The realtor can now say, hey, let's do this. You're selling your house at $100,000, but my client needs $6,000. My client needs $6,000 in closing costs. It just needs to happen. They can turn around and say, hey, why don't we offer you $106,000? But whatever that $6,000 extra, even though you're selling for $100,000, that $6,000 extra now goes to my client to help pay for closing costs. Can we do that? Eight times out of 10, the seller will say, of course. Why wouldn't they? They're not losing any money. They're not losing any money. Only time I've seen that no, when they say no, is because the seller is just, sometimes you just have a seller that's just hard-headed. They believe in what they believe in. Nothing wrong with that. But that's not my kind of people. I want somebody that willing to work with me. So, when that happens now you're getting 6% towards your closing costs. Yes, it works. But the only hiccup can come with that. Every house has to get appraised. Every house out there, you got to get appraised. Sometimes you're able to get away with it. That depends on the approval process. When we pre-approve it, depends. But every house has to get appraised. I want you to think that way. There's cases where it doesn't, but just think they did. Okay? The reason why we appraise the houses, ladies and gentlemen, is because we want to know if the house needs work. Is the house valued for what you're selling it for? And we want to make sure the collateral is there. House is the collateral. We want to make sure it's worth something. We're not going to just give you $100,000, $300,000. We're not going to know what we're giving it for. You're a good client. Thanks. But we want to make sure the house is good. We want to make sure the house is good. So with that being said, we want to make sure the house has the value. Now, let's suppose, remember, we changed the price. I was selling the house for $100,000. Now we're selling it for 106, so I can get $6,000 worth of help from the seller. That is what the seller's contribution is. It is help. Anybody that tells you different, they're lying. Okay? It's help for you as a buyer. So now the house has to appraise for $106,000. Anything less, you're stuck with the bill. You as the buyer are stuck with the bill. So if it comes in at 103 and you needed 106, you got to come up with $3,000. Now, don't be nervous. Don't panic. Don't go crazy. Don't lose it. Don't say, hey, it's all over. There's been times when we able to work situation out. Again, this is when you have a good realtor, baby. Your realtor can talk to the seller, say, hey, we need like an extra week. You can save up the money during the process. Or you can get what we call a gift. And we'll get into gifts. We'll get into gifts because that's what's fun. You can get a gift. You can get you can save the money. You can just get one more simple paycheck. Boom, you got it. Depending on when you get paid, obviously. Everybody gets paid different. But the truth of the matter is, there's help out there for you. You got to have a good realtor to help you negotiate that. Us as the lender, we're going to take that into consideration and say, hey, the person's getting help. Now we can put that towards the closing costs. Now we don't got to freak out. Oh my God, does this person have the money or not? Are we closing or not? Now we know. This person's getting help. And it'll be stipulated on the contract. Trust me when I tell you, it's in there. It's the realtor's job. There's a section in there. They write down, hey, this borrower is getting XYZ amount. You get that. So it's in the contract. All right? So we want to make sure that you guys fully understand what seller's contribution is. Now, they don't have to give it to you. Keep that in mind. A seller does not have to give it to you. It's not rule, law, set in the Bible, set in the Quran, set anywhere. It's not written on the wall. They don't have to give it to you. But a realtor can negotiate that for you. Okay? So now, we want to make sure that when you go stepping into, you find a house that you like, you say, hey, I'm going to use myself. I'm not a realtor, but we just say, hey, Mr. Mo, we want to make an offer on that house. I'm going to say, great, let's go do that. We'll make an offer on the house. And the seller says, they offer me what I want. Trying to get out of here. I'm moving to Alabama. I'm moving to Florida. I'm moving to New York. I'm moving to California. Or I'm moving out of the country because the country's crazy. Whatever. The seller wants to move. But they agree to sell you the house. So they're going to help with closing costs and things of that nature because your realtor helped you negotiate that for you. That's why they're there. They're there for negotiation people. They're the middleman. They're the middleman. It's the middleman for everything. When you buy stock, stockbroker's your middleman. It is what it is. Get an attorney, attorney is your middleman. It is what it is. You got to have a middleman. Bottom line. Now, there's ways how you can manipulate buying a house. Okay? Everybody asks me this. Doesn't matter if you have the money or you don't. Maurice, what about down payment assistance? That is the ultimate question. If I had a quarter for every time I hear that question, I tell you what, I could have conquered every video game, arcade game known to mankind with those quarters. I could have turned them in and probably be a rich man about how many times I get asked about down payment assistance. I can't. God, it's crazy, but it's there for you. It's there to help. It's there to help a buyer get into a home. Down payment assistance is nothing to be laughed about. It's not anything to be ashamed about. It's nothing that you got to say to yourself that, hey, oh my God, don't let anybody know I got down payment assistance. Oh, brag about it. I would. I'd tell the whole world. You know why? Because it's there for you. Now, there are situations to whereas you can get a lot of down payment assistance, and sometimes you won't. Now, what a lot of people don't realize is down payment assistance is usually, not all the time, it's really depending on your state, on where you are. Okay? It's usually income driven. Why would they give somebody that makes $500,000 a year down payment assistance? I don't know. They won't do that. It's just crazy. They're not going to do that. Okay? So, you got to keep in mind that it's income driven. And a lot of it, too, depends on how many people you have in your household. Because guess what? What if you made, let's say, 150 a year, but you got 6 kids as a single parent? Do you not qualify for down payment assistance? You probably would. Now, with down payment assistance, it also works with your credit score too, man. So it's like we gotta us as lenders, we gotta play this juggling act to make sure they fall into that box. Has to deal with credit scores too. Obviously, the better the credit score, the better your situation is. The worse your credit score, the worse your situation is. That's just the reality of it. Again, just like I said in the last series, last week, you know what your credit scores might be. You know how you pay your bills. So, we'll leave that there. But there are different types of down payment assistance programs. There's grants and there's what they call forgivable liens. Okay? Again, it's different type of down payment assistance. There's grants and there's forgivable liens. Good. Now, when you have a grant, okay, the state will say, hey, you know what? You qualify for down payment assistance. We're going to give you 6%, 5%, 4%, 3%, 2%. Only really seen them come down to 2%. Never seen them come down to 1. Never, never, never. But it can range from 2 to 6. Okay? Now, that covers your down payment assistance. In the event you have this down payment assistance, you get this grant, there are certain rules that apply with them. Certain rules. And usually the grant and the second lien, forgivable second lien, I'll get to that soon, they usually have the same rules. They'll say, fine, we'll give you this money, but you cannot sell or refinance this home inside of 3 years. That is what you call a prepayment penalty, ladies and gentlemen. That means what you took out, if you were to buy or sell, or if you were to sell or refinance your home inside of those 3 years, you would have to pay back that grant and whatever fees that curtail that comes with it. That's the catch. But fortunately, about 90% of the homeowners don't refinance or sell their house within 3 years. If they refinance, that's because the rates dropped. You know what I mean? And it made sense for them. Or, God forbid, something happens and they need to take out money. But they're going to have that prepayment penalty if they do that. Okay? So this is where it gets cool. What if, this is where you probably hear your aunties, your uncles, and cousin Rupert say, I didn't have to pay anything when I close. I've had those situations where the bar, I had bars get back money when they close. That's the insane thing. When we max out their down payment assistance, they get the whole six. They got it all. And the realtor, get this part, this is where it gets fun, drum roll, got seller's contribution also. So they pay for their closing costs and they paid for their down payment. And they got the grant for the down payment. So they got down payment assistance and they got seller's contribution. They got both. Whoa. So now you sit here with that 15 grand in your hands, but we talk about the 15 grand, that's all you got. You might get a check back at closing. Not guaranteed. Not guaranteed. It's never guaranteed. But there are situations where it happens. Or you come to closing with $0. How cool is that? How awesome is that? How about you buy a house and come to closing with nothing? A lot of lenders now, they don't tell you this. They don't tell you this. They're not going to tell you this. A lot of lenders don't do down payment assistance. I'll tell you why. And my lending community, I'm sorry in advance, but I'm trying to help my people, not keep them in renting. I'm sorry. A lot of them don't do down payment assistance. Why? Because us as a company, we don't make money. We don't make a lot of money. The lending institution does not make a lot of money off of down payment assistance. It's just a fact. So the lender will say, hey, we don't make money. This is a business. Sorry. Sorry. But the master closer does them. I do them. I have no problem doing it. My company realizes that, hey, we're in it for the long haul. We're not in it for the short haul. We're not in it for, let's make this quick buck. I have repeat clients, and they'll tell you, some people I've closed 5, 6, 7 years ago, and they call me, hey, Maurice, how you doing? I don't know. You want to have a barbecue? I'm chilling. I got my little 3-year-old with me, though. He's a little crazy. And, the wife is coming. So we're ready to eat over the house that I helped you get. No problem. A true loan officer is going to tell you everything about it, man. Down payment assistance, if you can get it, why not? Here's another caveat to the down payment assistance, though. You may qualify for a 5.5 interest rate, hypothetically speaking, because that's where the interest rates might be at that point in time. You might have AAA credit, the best credit out there, 820 credit scores. I mean, you can walk in a Bentley dealership, put nothing down, and drive right out with the car. You may have the best credit in the world, but if you want down payment assistance, you're going to get a higher interest rate. We don't set the lenders do not. I'm not even going to say we. Every lender that does down payment assistance do not set the parameters for the interest rate. The state does, or that governing entity does. You know why? Nothing is for free. So you're going to pay for it somewhere. You're going to pay for it. I am always of the mindset, this is just me personally, if you have the money to put down on the house and you got money left over, you set aside XYZ amount to buy a house, and you have extra money somewhere else that you're not using to purchase this house, spend the money. Spend the money. You know why? Because the difference between the interest rates is sometimes a big jump. The more money you get from the government, the higher, the bigger the down payment assistance that you're getting, is the higher the interest rate's going to be. It's just what it is. We don't control the interest rate when it comes to that. In fact, we never do, really, because you get what you qualify for. But you're definitely going to get a higher interest rate if you go down payment assistance. It's just what it is, ladies and gentlemen. I don't make the rules. Those are the rules that have been told to me that I am bestowing to you. Just a fact. Just a fact. When you see these people, when you hear these people, hey, I got this, I got that, I closed with nothing. Understand they did pay somewhere. Either they paid through it through an interest rate, or they paid through it by down payment, or they paid through it through closing costs. One of the three. It's happening. The reason why I say, if you have the money, use it, is because I can always break down for you. And your loan officer should do it too. If you have the question, your loan officer should do it. There's no qualms about that. Don't be ashamed to ask them. Don't be scared to ask them. You demand it. You want to know what's the difference between 5.5 and 7.25. What would I be paying? It is always going to be more expensive if you sit with the higher rate versus the lower rate. It's just what it is. Everybody wants the lowest rate interest rate in the world. Why? Because it's cheaper payments. But it's mathematically cheaper if you take the lower rate versus taking the money because it's free. It's never free. You're always paying. Plus, from a lender standpoint, if you have your own money, that holds more weight as if you have to go get it from somebody else. You're more likely to get approved for a loan if you have your own money versus to going to go get it from somewhere else. Whether it is DPA or down payment assistance or whatever, even getting gift funds. And I keep mentioning gift funds. I'm getting there. Bear with me. I got 17 minutes left. Don't rush me. But no, it's always cheaper if you do it that way. So we got to make sure, we look at the whole scenario. Okay? The whole loan in its totality. Because, again, we're not paying a mortgage just to get into a house. You got to live there for the next 15 to 30 years or however you choose to pay off this mortgage. You're the one that's going to be making that payment. We're not foreclosing. We're not doing that. We're not foreclosing. So I don't even want to get that in your head. We are not doing that. So we got to learn how to save the money, the best efficient way possible. Again, we want to work from a point of strength and not a weakness. Positive strides will give you positive productions no matter what business you're in, what you do in life. It will always come out to positive production. Now, let's talk about the assets. Let's suppose when we say assets, we mean money in the bank or wherever you're getting the money from to close. When a lender ever tells you, hey, we need assets, ladies and gentlemen, we want to see the money. Was a movie from Jerry Maguire? Show me the money. Let's not say Johnny Manziel because he was a bust, but Jerry Maguire, show me the money. That's what the lenders want to see. Show it to us. Now, a lot of people have issues showing their bank statements, showing their financial statements, and things of that nature. I get it. I get it. I'm a very private person too when it comes to money. Anybody in their right mind should be very private when it comes to their money in the bank. Everybody. Everybody should be very private with their money. But I'm telling you right now, if you're coming to a lender to buy a home, we need to see everything. There is nothing that's going to slip by us. Nothing. It is our job to catch those things that you're trying to slip by us. It's our financial duty to catch those things that you're trying to wipe under our nose. Just get it by. He won't pay attention. He won't see that. So you cannot black out bank statements, ladies and gentlemen. There's no Sharpie. Don't blank out account numbers. Don't black out anything. Take your Sharpie, throw it out the window. You cannot black out anything. We need to see everything. Every page of your bank statement that you receive every month. Oh, Maurice, I don't receive anything in the mail. You may not receive it in the mail, but the bank got a copy of it. You need to figure out how you can get that bank statement to me. I need to see every page, even if the last page is blank. But if it says page 8 of 8, I need that page too. Because I don't know what might be on it. Even though you may say, hey, there's nothing there, I need to see it. Prove it to me. Now, you probably see me rant a little bit on TikTok, or probably see me go crazy a little bit, or post it, just a random post. Moving money around is a serious problem that people have when it comes to buying a home. Now, I get it. You know, sometimes you gotta take from the savings account to pay a little credit card bill down, you know, a little $1,500 there, a little $3,000 there, a little $200 there. You're moving, you're shifting, you're moving, you're shifting. That, see my head just pop? It just popped. It did that, it just popped. Drives us insane because we do not know where the money is coming from. Ladies and gentlemen, it's 2022, and for all we know, it could be drug money for all we don't know where the money's coming from. You know, money laundry is a big deal in our business, a big problem. So we have to do the checks and balances on everything. We need to see where it came from. If it came from XYZ, ABC Bank, we need to see that statement too. We're going to track everything. We're going to track everything. Sometimes you have stuff that's coming out of your bank account that is not on your credit report that you pay every single month. We're not talking about car insurance or anything like that. We're talking about small little loans or bill pays. Like, you know, you're paying a credit card that just doesn't report, or you're paying some private money guy that doesn't report. Or you could be paying back your uncle. Your uncle could have said, hey, listen, I'll loan you the money, but you got to pay me back. with interest. Guess what? That is a loan. That is going to account towards your monthly debt. That all affects how much house you can buy. And we need to figure out how much your monthly debt is so we can figure out your down payment. We need to be real with ourselves, ladies and gentlemen, on how much we could afford. We need to be real with ourselves. How much can you afford monthly? That is one of the first questions I always ask. What is the maximum you can afford? And we're going to work under that. We're going to work under that. And that's going to help me determine how much you need to come to the table. And a good loan officer is always going to tell you the worst case scenario you need to come to the table. If I tell you 20,000, 9 times out of 10 you come to the table with 17, 18, maybe 16, depending on how, when I see your bank statements, it just depends. If it's money shaking everywhere, I'm gonna overestimate a little bit more than usual because I don't want you to be broke. I don't want you to be broke. I don't want you to be house poor. I don't want you to spend every dime to get into a house and have nothing. Nobody wants that. Nobody. So we need to make sure we have the money in the account and there's not a lot of action in it. If you have a savings account, truly keep it a savings account. Save money in it. If you need to move money around, open a whole different account. I'm not going to ask for it. I don't need every account that you have. I just need the money that we're going to use to close. If you need to move money around, open a totally different account, dump money in there, and then y'all play with that. But when you put a deposit on the house, use it from the money you're going to buy the house from. Use it from the bank account you're going to buy the house from. When you're coming to closing, cut a check from the deposit from the account you're going to buy the house from, or wire it to the title company. That's another story. We'll talk about that another day. But we got to make sure we trace everything. Now, gift funds. Remember we were talking about gift funds? Now, a gift is something that someone can give you towards your closing costs. A lot of parents give money over to their children to purchase a home. And I'm going to tell you the people that are legally allowed to help you purchase a home has to be an immediate family member. Immediate. Or when I say immediate, brother, sister, son, daughter, mother, father, grandma, grandpa, or a fiance. Obviously a husband or a wife. Because sometimes they can't go on a loan because of credit issues or whatever. These people can give you money to purchase on the house. And the amount is unlimited. They can give you all of it, or they can give you a little bit. It just really depends on what they have to give. What if, check this out, what if I'm buying a house from my mom? What if I'm buying a house from her? Everybody know Miss Jasmine. Say hi, Miss Jasmine. That's my mother. Crazy lady. Cooks great food. Anyway, what if I'm buying a house from my mom? My mom could turn, and nobody has the actual dollars in their pocket to give, but my mom has equity in that house. They can do something what they call a gift of equity. In other words, the equity from that property, whether it's $30,000 in equity, $10,000 in equity, $15,000, whatever it is, can go all the way towards my down payment and my closing costs. And I would have no problem as a lender. I would have no problem. I'm like, hey, that's mom, dude. Who am I to judge? They can help you out. They can give you all that money. We have no problem. We'll move. We'll keep it moving. We wouldn't even bat an eye. That's mom. That can happen with a brother, sister, son, daughter, grandma, grandpa. They can all do that for you. Even an employer, if you've been relocating and your employer says, hey, Texas, guys blowing up out there, and we want to relocate you to Texas because we're getting ready to build a headquarters out there, and we want to get you jump started because we got a position for you to get going. And you can work remotely. So the employer can give you the money towards the close. Who am I to tell you now? Your job is giving you money to buy a house. They're taking your family and rerouting them. Who am I to tell you no, you can't have that money? Who is a lender to tell you no, you can't have that money? Take it. That's if you feel like relocating, obviously. But, it's a great deal, man. Gifts are great. We'll take that all into consideration. Always. Always. We definitely take that into consideration. And we want to make sure that on doing this, when you're getting a gift, we're going to document it. So a lot of times also, people are very private. Again, I'm going to go back to privacy. Everybody is, I understand. But whoever you're getting the gift from, let them know. Mom, dad, grandma, I get it. But we need to know that your account is real. They cannot black out anything. No account numbers. They can't do it. Can't do it. They can't black out anything. Anything. It's very essential to our business that we be able to see everything on the accounts. Very, very, very essential. I can't stress enough. We need to see everything. And if we can't read the bank statement, sorry, you better go to Kinko's. Send it again. We need to be able to read it. Because if I can't make out if it's a 9 or a 3 or is it a 8, I don't know. Is it a 4 or is it a 1? A little blurry. I don't know. I put on binoculars and my shades and my glasses and my contacts. I put it all on and I still can't make it out. I'm going to tell you to resend it. And anybody should. If something is illegible, that you got to resend it. It is what it is. Sorry. Ran off on a tangent. Obviously, I've been there before. Also, one of the acceptable forms of down payment is a 401k. Now, a lot of people tell me, I don't want to touch my 401k. I get it. I get it. You worked hard. You got money devoted in there. But let me tell you something. And I said this before. Not in this segment. Go to my YouTube. Look at it. Master Closer. I'm on YouTube. The greatest investment in America is a house. The greatest investment in America is a house. America was built on real estate. If it ever falls, or it's fallen because people have taken over our real estate. But, we are USA, we are never falling. But that's how it's been built. By real estate. Your 401k, if you got 60 grand in your 401k and you're relying on that as a retirement for the rest of your life, I'm sorry to tell you, I hate to be the one to break the news to you. That's going to be a very difficult way of living for the rest of your life. And I understand, the stock market may do great. Sometimes it may do bad. I don't know. But real estate markets, they go a long period before they crash. And if they crash, you can always get out quick. Always. Always. You're going to make more money in the real estate market versus a 401k. It's just a fact. You can do the numbers, check them out. You can play with the numbers. That's when I tell you to go Google it. Go Google it. I guarantee you it's different. It's better in the real estate market. Take that money and you can purchase a house with it. Only time a 401k will allow you to take money out is if you are under hardship, when everything's going to crap, you are closing out the 401k, or you are buying a house. It's the only time they will let you withdraw from the 401k. Same thing with Roth IRAs. They're very restrictive, man. They're very restrictive. IRAs, money markets, you can, those are a little bit more lenient, but they have some strict rules too. But mostly 401ks, so I'm going to harp on that. You can take that money and purchase a house. Now, when I see a 401k and you say you have 30 grand in there, they're not going to let you take the whole 30 grand. They're not. You know why? Because if you're withdrawing it, you're paying taxes. How much taxes? I don't know. Not an accountant. That's when you have to consult your accountant or the people that hold your 401k. Now, with teachers that have a 401k, I know it's hard for you guys. You guys usually are not able to touch it until you retire. That's just a fact. I run across that a million times. I've heard it a million times. 9 times out of 10, that's the case with them. But for the average person that has a 401k, if you take out 30 grand, you're probably, most likely, 10 times out of 10 going to be taxed as soon as you take it out. Even if you take out a loan on it. Now, don't panic. Don't say, hey, man, I'm broke now. I don't have a 401k. No. Your money's in the house, man. That's your money's in the real investment, the house. The one that you're getting ready to put a deck on, you about to, if you don't got a pool, you're about to dig one in the ground. If, you just put new cabinets in there, you upgraded the house. Maybe you want to put a second room upstairs. Maybe you want to put a game room in there. Maybe you want a man cave so your husband can just leave you alone, or, just leave you, get out my head. I'll see you when I see you. You never know. Never know. But your money's in the real investment, the house. So I've gone over my normal hour, ladies and gentlemen. I've gone over. I hope I'm able to help you guys out. I've been getting calls while I'm on the phone. I've ignored them for you. I want to make sure that I'm here for you to give you guys the insight of this little peanut I got here. Please subscribe to my YouTube channel. I'm there, Master Closer. You will find this same very video there. Like this video, share it with your peers. Please, I can't urge you enough to share it with your peers. The more exposure that goes out, the more knowledge. Obviously, it's better for people. Please share it with your people. Find me on TikTok, Master Closer 19. I'm there doing crazy TikToks too. Find me on Twitter. I'm there, Master Closer 19. Find me on IG, Instagram. I'm there, Master Closer 19 again. I'm there on Snapchat too. I'm on the Snap. These kids done got me in the Snap. So they'd be like, what's your Snap? I'm like, I don't know. It's this QR code thing. I don't know. I'm old. You see the grades. But yeah, man, please like and subscribe. Please, on YouTube. We're trying to get there. We're trying to get as many followers as we can. And also, in a couple of weeks, I'm going to have some people on the panel. We're working all this particulars out so we can have, you guys can ask more questions. Until then, stay tuned to next week on Workshop Wednesdays. Stay tuned. I'm going to be back here again, 12 o'clock sharp. You know what I mean? I'm going to be back here. Stay tuned. See y'all later. Nice chatting with y'all. Peace.